Welcome back to Squawk. Energy prices, they are falling this morning. This after Brent crude briefly hit $80 a barrel for the first time in about 3 years during yesterday's session. Soaring natural gas prices are now also shaking up the energy market. Want to bring in Ed Morse, global head of commodities at Citi. Who would have thought? Who would have thought, Ed? What was it? Maybe 18 months ago, less than 18 months ago, when a barrel of WTI was negative, and here we are. You stocked up. You bought some barrels.
Well, we suggested people buy for a long time.
One time. So what are we going to do here, and what's going to happen next?
Well, it looks like the winter is going to be a real test for a bunch of things. European prices and Asian prices are much higher relative to where the U.S. market is, and that's because the U.S. market is somewhat insulated, particularly on the natural gas side. I think the oil price is a little bit on the speculative side of things, but the gas prices around the world are really reflecting a really significant lack of material at a time when electricity demand is soaring and there's no availability from the renewables that either the Europeans or the Chinese were relying on. And coal inventories have been really diminished because people have been shutting coal mines and shutting coal-fired thermal power plants. So they're in a mess. The only incremental fuel they have available is natural gas, and it can double from where it now is by the end of the winter.
It can double, you think? So that's not a speculation. I mean, you just said you thought some people were speculating. If you're saying it could double.
I thought there was the financial flows on oil, but on natural gas, the market is unbelievably tight.
And if you were a betting man, which is sort of what this business is to some degree when it comes to the price of oil, 12 months out, does this get sorted or it doesn't?
12 months out, our base case is that price is going to be much lower. We're looking at a significant amount of demand growth next year, but much more supply growth. If you look at just the main producers, the U.S., Canada, Norway, Brazil, what's happening in Guyana, Suriname, not to speak of what might happen in Russia, we're looking at around 2.5 million barrels a day of incremental oil supply in the market next year from non-OPEC suppliers alone. And the OPEC plus countries have a desire to get back their market share. So it's going to be a difficult market on the oil side next year. And natural gas prices a year from now, I would not be surprised, would be lower as well with the supply response. But the world has got to get through the winter. And there are two big dangers with the natural gas price and the power generation price. Electricity prices are affecting consumers and they're affecting businesses. So there's an impact places in Europe where people might go to the streets and businesses might have to close. So it's going to be a very difficult winter in our minds.